Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar bulls poured at the Grand and charged at the minor resistance seen at 68.45. At present, the market still appears to be focused on this level. From a technical perspective, we should not discount at least another attempt as the busy week slowly unfolds and the market now looks towards the RBA governor, who speaks later on today at 4:45 p.m. Sydney time. And then on Wednesday, the Australian inflation report is due out. In the US, GDP data will be released on Wednesday before the US Federal Reserve Open Market Committee, or the FOMC, October interest rate decision. This will be released at 4 a.m. Sydney time. The FOMC is expected to cut its key interest rates by 25 basis points. So turning our attention to the technicals, the fact is we have broken above the midway point. Therefore, could see a break maybe of 45, but I feel that sellers or supply is clearly around this area, which is seen at 68, 85 to 95. Overall, I feel the market will defend this level and still keep its focus on 67.70. Because don't forget, 68.45 was fouled last night. We haven't broke it yet, as 43 has been the high. Very interesting to see that since the bearish outside range day, is that the euro and also the bullish outside range day to the US have respected levels. And that is the fact that the overnight sell-off in the euro is holding above the level of 110.65, which is seen as the trigger level. But more volatility is still seen for both sides of the market, as the US dollar no doubt will be swinging in and out of losses and gains like the euro, as it challenges and looks for different direction. A little bit more confirmation is required, but the MACD is not too far away to support a bearish case. Along with that, if we break 110.65, then I am looking down towards 109.55 as a target. Resistance seen at this stage at 111.45 on an intraday view. Dollar yen, well, the market is pressuring this level of 109.05, and it is assessed that the fact that if we break above there, that could unleash the bulls to a short-term burst of demand interest. But this should give us opportunity, as I feel the market at this stage is struggling, and no doubt above 109.05 would see further supply increase. So no doubt I still feel that the bears will return from this region. Not getting overly bullish, because the fact is the MACD is very, very flat, and the RSI, well, could be a little bit of divergence there when it comes to the bearish case. So let's see. Overnight, the wheels come off the bandwagon after the British MPs vote against an early election. It was, overnight, the number of the House of Commons voted at 299 to 70 to hold an early election, but that fell well short of the two-thirds majority of all 650 legislators that Johnson needs. No doubt the market will continue to trade whipsawed in a manner that suggests that I believe the bears are coming back, because we've got an outside range day. We've got two indicators here supporting the bearish case. If we break 127.85, then I am negative towards 124.70 to 125.40 as a target. The knee-jerk reaction to the upside has now followed through further once it took out 1,500 overnight, and posting fresh low around the levels where we are at the moment at 1,490 to 91. It is assessed the support is seen at 87, and if broken, we'll see further risk towards the downside of 81 to maybe 76, but still seen as an opportunity, because I feel the market will eventually hold to a bullish case. But the rejection, and also the fact that the market may be looking to see a knee-jerk reaction to the upside if the FOMC does cut rates by 25 and is more dovish to the statement, then yes, gold will probably trigger further to the upside. But it would seem that the trade negotiations with the US and China is still calling off, that is, because President Trump said he expects to sign a specific part of the, or significant part of the trade deal with China ahead of schedule, but has not elaborated on the timing. He went to say that we are looking probably to ahead of a schedule to sign a very big portion of the China deal. We call it phase 1, but it's a very big portion. So the market, of course, has reacted against that, and safe haven demand has slacked off. So that's why we got a bit of a drop there. Finishing off, well, it would seem that the bears have come back at the level around 56.40.70 after the bulls reached its target. I do believe now that we are in a bit of a softer place and now looks towards a region of 55.30, maybe to where the bulls may start looking to come back, but still keep a judgment of error in case we slip towards 53.35 to 45. Overall, though, wherever the support is inside here, we should still rebound and look back towards the region beyond 56.70 and up towards 57.55. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new day.